Are you surprised that he pretty deftly deflected questions about any sort of impact, negative impact of the U.S.-China trade war on monetary policy, saying that, look, essentially the messaging was, we'll keep an eye on it?
And he's in a very tough political position. Of course, it's the big hot potato issue, but he was trying to handball responsibility off elsewhere and not wanting to comment too much on the politics. But I think it's clear where he stands on it, which is he doesn't support what the administration is doing. I mean, he kept his remarks to history, and it's an empirical matter, so trying to keep it factual rather than opinion. But I mean, the clear implication from that is that he is worried about what some of the impacts will be. And I think inflation, probably more so than growth, is in the longer run where we are going to see an impact from this trade war.
So 2 more rate hikes are not a lock then. Is that what you're saying for the rest of this year?
I think the risk is certainly on the upside in terms of how many rate hikes we might see. And we've already got this fiscal stimulus coming in when the economy is already at full employment, so not very sensible fiscal policy making there. Plus this trade war coming in, adding some tariffs, prices of business inputs are going to rise, so there'll be cost pressures as well. So I think the Fed is probably looking at more rather than less rate hikes.
So which of the EM markets or Asian markets do you think will be more affected by, by the trade tariffs that's actually going on?
I mean, North Asia, it's South Korea as well as Taiwan, but what about EM Asia?
Right. Yes, I mean, for the emerging markets, I mean, the ones I think are at a risk from the Fed hiking faster are Pakistan, Sri Lanka, Indonesia and Vietnam, I think are the 4 that I would worry about. Now, for places like Pakistan and Sri Lanka and Indonesia, it's a normal story of, look, they have big current account deficits, they need a lot of financing, their currencies are quite volatile, so their risk is kind of straightforward there. Vietnam's an interesting case. It's actually transitioning from current account surplus to current account deficit over the next couple of years, and it's also got that currency peg. I don't think the peg is going to break, but it's going to find it tougher to maintain.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.